You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
It's a great time to buy. It really is. I haven't seen sentiment this low probably since March, April of 2020.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers, and we are checking in with David Erfle, Dr. David Erfle, as we like to call him on the podcast. We gave him an honorary doctorate some months ago. His website is juniorminerjunkie.com. Avid, retail, sophisticated, private mining investor, has a great newsletter that I would recommend if you're looking for guidance of how to be successful in the natural resource sector and you want specific stock ideas. David has about 30 plus stocks that he covers. So there's more than enough to choose from. Dave, thanks for joining me. You've been out of the country and I'm wondering, did you take all the junior gold stock investors with you when you left? Because things sure slowed down since I last talked to you.
Yeah, it's funny. Every time I go on vacation, the sector usually has a little hiccup. And I have this running joke with Corey Fleck, who I do a lot of interviews with over at Correlate Economics. He's like, don't go on vacation. And as soon as I come back from vacation, we usually have a little pop in the sector. And it's funny, the pop happened while I was in the plane coming back from Europe.
So you are the bellwether. You told me to look to Bear.
So I just got to start right now and tell everybody, in the future, when I go on vacation, I'll let everybody know.
Yes, please do. Please do, because a lot of my stocks dropped. Well, Dave, let's get your commentary on the gold price. You look at it from a technical standpoint. You've been talking about double tops or possible double bottoms in your newsletter. Can you give us your analysis of the gold price, please?
Oh, sure. Yeah, it's pretty much sleepy time here in the sector. I mean, end of July, early August, you're like right in the middle of the dog days, and people who are new to this sector, we really haven't had summer doldrums for the past 2 years. They were kind of waylaid by all the incredible things that were happening in the world, making gold and their shares, gold stocks, attractive. But this year summer doldrums came back with a vengeance because, all these people that were locked up for 15 months are finally able to go on vacation, and that's what they're doing. Everybody's going on vacation, and they're pretty much ignoring the sector that is still consolidating its gains, which is gold stocks, while everything else, all these other sectors are going up. The stock market keeps making all-time highs, and the gold sector continues to consolidate. And if you're holding core positions like I am, some of your paper gains have gone by the wayside for now. But also, if you're holding a lot of cash like I am, then you're happy to see this take place, because this is the best kind of market to really take your time to talk to these management companies of the companies that you put on your watch list, of the ones that have done the right thing and cashed up when they should have. It's a great time to just be patient and wait for the price to come to you, because if you have a certain price that you want to pay, there's a pretty good chance that that's going to get hit during this type of market, which is really low volume, big moves with small volume that come back and revert to the mean really quickly, and just not a lot of interest. And, we love this sector for multi-bagger gains. And the only way to make these multi-bagger gains is to buy in a market like this. There's two types of corrections that happen in gold stocks. There's the sharp panic move down correction that we saw in March of 2020, which is a difficult one to buy because it snaps back so quickly. If you're not prepared with a list already of what you want to buy, you're going to miss it, and you're going to end up having to chase, and nobody likes to chase stocks in this sector. Then there's the other kind of correction, which is the frustrated, slow Chinese water torture type correction that we've been having for exactly a year now. And each time we have this this move up that looks like it's going to break out, it takes more people off the gold stock bandwagon, and we've had like 4 of those now over the past year. And the last one, it looks like it took most of the retail it took most of the retail players with it. Like, this is it. This is like the 4th time I've had to deal with this. I've got these losses in these gold stocks. I'm going to go ahead and take them now for tax loss, even though it's, it was in July and now it's just the 1st of August. People are actually selling for tax loss their gold stocks now. I've talked to other people and they're doing the same thing. And it's always a great time to, for somebody with a lot of cash to pick up somebody's trash that is a great that is a great company. They just bought it at the wrong time, and it becomes your treasure because you're getting it a lot cheaper. It's just very difficult to try to figure out when to do that, because we could still have another move down in this sector very easily. But a lot of these stocks, they're sure trading like they're sold out. I know this wasn't your original question. You asked me about the gold sector, and I went into gold stocks. But if you want me to answer that question now, I will. I mean, as far as the gold price is concerned, it's still consolidating that huge move, that doubling in price from $1,050 to basically $2,100 from 2016 to 2020. That is a huge move, and it's only corrected 20%. While in the meantime, gold, the equity sector continues to go higher. So, like I said earlier, you've got equities that continue to go higher. You've got risky gold stocks that continue to consolidate. It's a lot of gold stocks are a lot of people's trash right now, so they're taking out the trash.
But Dave, you would agree with Adrian Day, who I had on the show, I think a couple months ago, where he said this is about the best gold stock buying opportunity that he's seen. And he looks at the producers. But if you look at what even the March buying opportunity last year, silver got down to like $12. Now silver is twice that amount. And when you compare them relative to what the equities are trading for, there could be the argument for an attractive entry point.
Absolutely. Yeah. But you have to put this action in the gold stock, and especially in the juniors, in the proper perspective. We had a move in the junior sector. We saw the GDXJ go up 180% in 4.8 months. We saw many silver juniors, gold juniors go up 5, 6, 7, 10 times, right? The moves got way overbought. Not only overbought technically, but their valuations got ridiculously high in relation to what the companies had proved up to that point at that time. But if you take a look at the companies that did the right thing and took advantage of that move and raised a bunch of money, right? So at the same time, you've got the dilution of the money they raised, combined with frustrated gold stock investors buying too high at the time and just getting frustrated that the stock isn't going higher. Gee, my stock that went up 10 times in 4.8 months isn't going any higher. You have to give those moves time to consolidate. So you shouldn't be buying gold stocks when you see these rhino horns. That's when you take the profits that you've hopefully made before the rhino horn took place. And that's what you're doing right now. You're taking advantage of this time down to look for the companies you expect to rhino horn in the future. They're fishing lining right now. They're fishing lining after making these huge moves. So there's a lot of babies, really attractive babies, being thrown out with the junior bathwater right here. And it's your job to decipher which ones are the ones to get into as their fishing line. Because let's face it, 85, 90% of these juniors are garbage. There's only like 350 companies that are even viable. So that's another thing that these bear markets have yet been able to do. These bear markets have not substantially taken away a lot of these lifestyle companies. There's still a lot of these lifestyle companies around, and they get thrown into the mix. They have these great promotional campaigns, and if you don't know what you're doing, you fall for their promotional campaigns, and you get into them, and you end up chasing them, and they're just lifestyle companies that really don't have viable projects. So that's where a person like me comes in, a newsletter writer that does this for a living, that buys these companies, that researches these companies as much as I possibly can. And then before I buy them, I tell my subscribers that I'm going to buy them. And we kind of get into it together, and I cover it while we're in it together. And hopefully we profit from them. And more times than not, I do a pretty good job of getting them into the right company.
Arcana Silver is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven and probable silver reserves grading nearly 37 ounces per ton silver, with all-in sustaining production costs of only $8 per ounce of silver. The mine is fully funded and permitted with infrastructure already in place, and has announced production will commence in 2021. Achieving successful production should result in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. And you gave 3 recommendations. Recently, I'm not asking you to name them, but some of those recommendations have the qualities you're talking about. And as you're saying, for a new investor, look at the cash position, because these things are negative cash flowing. They burned through cash. The treasury's not full. It's probably not the best time to buy the stock, right?
Oh no! Right now, if you haven't cashed up by now and you're a junior, there's something really wrong with your project if you need cash. Because I mean, the capital markets have remained extremely accommodative all during this year-long consolidation process. Mines are being financed, projects are being financed, terms are really good. They're being upsized almost as soon as they're announced. The money is still flowing. I mean, previously, in this sector, I've been through these things. I've been through so many cycles here in the past 20 years that I've been in this sector. We've had these bear markets where not only have you had a bear market in the share prices, but you've had a bear market in capital markets. And that's just death for this sector. When they can't raise money and their stock prices are going down, that's a sector that you run away from, and you don't come back until the capital markets get friendly again. And that's why I'm so excited about what's happening right now. Sure, my core positions that have come off some of my paper gains have gone down. Fortunately, I took some profit off the table in some of those at near the top. But watching your capital hard-earned paper gains go by the wayside, it's not an easy thing to do. But that's what these things do. They go up 4, 5, 6, 8 times, and then they correct at least 50% afterwards. And I've seen a lot of these stocks correct at least 50%. One of the ones I just recommended has come off 65%. Yet while it was coming off 65%, the company keeps announcing assays of high grade results. They're de-risking properly. They raised money at the right time properly. They have district scale sized projects in a top tier jurisdiction, and they've raised money at the right time to keep their share float tight. And management owns 21% of the company. And insiders have not sold a single share, and they keep buying on the way down. You want to see things like that. You want to see a management team that really believes in their project. And also their previous company, that this company was a spinoff of, they sold for a huge premium to market after they took the share price from pennies to dollars. So you want to see success stories like that. You want to see them buying their own stock. You want to ask them how much they paid for that stock also. And as the conversation that we had before we started talking here on camera, you want to make sure that there's not a lot of cheap shares out there that friends and family got in for like a penny or two, and they're asking you to give them money at 10 cents.
Yeah, very good advice, Dave. On the idea of mines getting brought into production, you kind of mentioned that two that you're familiar with, Marathon Gold and Rio2. Were you happy with these capex financings to bring these mines into production?
Well, I know both of these companies are in my top 10 portfolio. In my JMJ portfolio, I have a JMJ top 10, and these two companies are in that top 10. And I know Alex Black, CEO of Rio, wasn't happy with that finance, and I understand. But you have to do what you have to do. He took a stream, which he didn't like to do, but you've got to limit dilution when your share price is trading where it is. But the share price has held up really well. The money that they had to raise at 65 cents, the share price hasn't gone below that. The market seems to like it, and the upside is just huge. It's a low capex heap leach project that's going to make gobs of cash. The only thing you have to worry about down the road is the political situation. You got a election coming up in Chile here, I think in November, and how socialistic it's gotten there in that part of the country. Peru, what just happened in Peru, the hard left Castillo winning. Bottom line is both these countries, they're very mining friendly, and they got to continue to be mining friendly because that's where they make a lot of their money. So I don't see it being that much of a problem. And also there's the water issue, but Alex has done a good job with figuring out where they're going to get their water, and I think they're making some water deals right now. But I wasn't really happy with the terms of the Rio, but I understand why he had to do it. As far as Marathon is concerned, they've done a really good job of minimizing dilution. They've got a lot of their cash from one of the biggest mining geniuses in the business, Pierre Lassonde. They already had 115 million, so raised it so getting 185 million credit facility wasn't a problem. The terms are decent, and that mine is now is now financed. So I really like Marathon as a takeover candidate. I have, and I've really been happy of the fact that it hasn't gotten taken over yet, because I want it to continue to go higher before it does, and I think it will. If you take a look at the market cap, which is I think now is about 800 to 900 million. You've got Newfound Gold's market cap is 1.5 billion, and all they keep doing is drilling. Sure, they're drilling bonanza grades, but they're only stepping out about 10 meters, and they haven't even got a resource, not even close to a resource estimate yet. And Marathon Gold has about 5 million ounces of high grade open pit, and their market cap's only 900 million. So, the craziness that has gone in Newfoundland is really good for the gold sector. Don't get me wrong, and I have a couple of other investments in that area, so I'm really happy with what's happening there. But when you see a crazy market cap go up like that on just a drill play, that's something you really don't want to chase. That's something you just want to follow, and you want to cheer their success, but you want to do it from the sidelines. It's like, oh, that's a train that I didn't get into. I don't want to go chasing it. But what I want to do is I want to look at other companies in the area that might have a chance of doing the same thing. Of coming up with similar type of grades that are maybe on strike or on trend. Or I'm not a geologist by any stretch of the means, but I know that once an area play gets hot, you want to pay attention to it and watch how it plays out, and maybe get into something earlier that might have a chance of doing the same thing.
Dave, you brought up Peru. Yes, there's a far left candidate, but then with the opposition party in Congress, and it seems like he might have extended an olive branch with some of his finance appointments.
Had to, yeah.
Yeah. Does that make you feel a little better about Peru?
Oh, it does, yeah.
Okay.
But I'm still avoiding anything that needs to get permitted in Peru. I have one company that has projects that have already got defined deposits, and they've already got permits to drill.
You mean production permits, not drilling permits?
No, drilling permits.
Okay.
Drilling permits. They've got drilling permits. It's because a lot of
no, but when you're avoiding for permits, you're talking about going into production permits, not permits to just drill out a project to explore.
No, I am talking about basically consulta previa permits. That's what it's called. It's called a consulta previa permit. And a lot of these projects still need to get that permit before they can drill. These earlier stage grassroots projects, they still need to get that permit. It takes a long time to get it because I think they're on their 7th mining minister in like 2 years over there. And each time a new mining minister takes over, it's like the process starts all over again where they have to get up to date on what's happening, and they have to teach everybody to do the right things, and it's just it's a very difficult red tape process. So because I love Peru, I love the prospectivity. There's a lot of projects there that I'm really attracted to, but like I said, I'll only invest in a Peruvian exploration play if they have the permits. Now, as far as production permits are concerned in Peru, it's a little easier to get those permits, depending on each specific situation. But yeah, I mean, I've only got one stock in Peru now, so I pretty much avoided the jurisdiction for now to see how this plays out. And as far as Chile is concerned, the only exposure I have to Chile is through Rio2.
Okay. So you gave 3 picks this last weekend, buy recommendations. So we expect more of that from the Junior Miner Junkie newsletter for people thinking about subscribing. You think you're going to be going into the market more over the next month?
Well, technically I gave 2. One I'm still waiting on because I think it's going to come down more. So technically I gave 2 outright buy recommendations on. But I've still got a lot of cash, and I think I'm going to keep that cash handy for a while. Because I mean, we could still get another move down here, and taking a look at the GDXJ, it's constructive. It looks like it may have double bottomed at 43, and there's a very bullish island reversal pattern on the daily chart that's in play right now. But there's such low volume and so little interest, anything could happen right now. So I'm still keeping some cash for later tax loss possible deals. But yeah, I mean, it's a great time to buy, it really is. And I haven't seen sentiment this low probably since March, April of 2020. And in March, April of 2020, while the sentiment was low, all these juniors needed cash, they weren't cashed up. That's what was so scary about the last correction, and that's why it was a sharp V-shaped correction, and that's why it sold off in fishing line fashion, because at the time where nobody knew what was going to happen with COVID, with everything shutting down, these juniors that just hemorrhaged cash didn't have any.
And some finances were canceled. At that time, I felt bad for some companies.
I know.
Yeah.
And it was so heartbreaking, because you're friends with some of these people and you root for them. They're good people and they're doing the right things. It's just they're victims of the market. They've done all the right things up to a certain point. There's just so much of this business is timing. You could do everything right, and then the bottom can fall out of the market right when you get close to a time where you're going to do a finance, your share price is at a good price, you're getting the paperwork together, you're about to do it, and all of a sudden a hit comes out of nowhere. That's just the challenges of this sector, which quite frankly is one of the reasons why I love it. It's the most challenging sector to make money in, and I like a good challenge. And this is a very challenging sector.
With what you said about the capex financing for Rio2, it's not ideal, but you have to take it, right? I've talked to CEOs of development projects where they said, "Listen, this thing is like I'm a plane barreling down the runway, and I got to get off. And if I don't take off here, this project's going to crash for my current shareholders. Somebody's going to pick it up at a fire sale and make money for shareholders down the road. But if you want me to make money for you, I got to get this thing off the ground."
Yeah, that's a great analogy, Bill. Yeah, that's a great analogy. Yeah, I like that. That's exactly the case. Sometimes you just got to do you got to do the deal with the devil. You got to dance with the devil sometimes, and just make sure it's not a company killer. You're going to take an early hit. And maybe you're subscribed, maybe your shareholders won't make as much money, but I'm telling you, as far as Rio2 is concerned, If the gold price runs to $3,000, I mean, that still looks like it's got 6-7 bagger potential from where it's at right now. It's a low capex mine. It's a heap leach project that'll make gobs of money when it's built. And Alex has done it before, and it looks like he's going to do it again now that he's got it financed.
Excellent. Well, Dave, I missed talking to you last month, so thank you for coming on the show. If you would like to learn more about Dave's, what he offers, his subscription, go to juniorminerjunkie.com, and a link is in the show notes. Again, Dave, thanks. We'll be touching base with you in about 30 days.
Always great to talk to you, Bill. Thanks for having me on.